Hello, and welcome back to the Strange Water Podcast. Thank you so much for joining us for another great conversation. A few days ago, I was listening to a crypto news show when I heard one of the guests say, "It is hard to overstate just how much of a bubble crypto Twitter is." That comment really spoke to me, not only because I think it really captures some of the incredibly myopic and sometimes extremist views that we take for granted, but also because I often find myself lost in the same echo chamber. So, taking that comment as a prompt, I decided to call up on an old friend from my time at Anheuser-Busch, Brendan Picha. And although that was long before I had any interest or understanding of crypto, you'll hear that he was already advocating hard for Bitcoin and digital currency at the world's largest beer company in 2013. After leaving Anheuser-Busch, Brendan moved on to Liberty Mutual, the insurance company, to continue with corporate innovation and blockchain evangelism. Today, Brendan is one of the senior leaders of the Institutes RiskStream Collaborative. The RiskStream Collaborative is a nonprofit organization that sits between the world's largest insurance companies to educate, build products, and integrate blockchain-based solutions. Today's conversation is about reaching across filter bubbles, if for no other reason than to gain perspective on what we are building. For me, understanding how the insurance industry thinks about the purpose of blockchain or the challenges of implementing cutting edge technology and even collaboration across a competitive industry answers a lot of the questions that we on crypto Twitter rarely think to ask. But what I found most interesting was how Brendan and really the insurance industry view what they are building as completely separate from Ethereum, despite using similar technologies. And so, in this conversation, I give him my pitch on how it's all part of the same story, that Ethereum is inevitable. One more thing before we begin. Please do not take financial advice from this or any other podcast. Ethereum will change the world one day, but you can easily lose all of your money in the process. All right, let's get started. Brendan, thank you so much for joining us.
Nice to be here. Thanks for inviting me, Rex.
No, man, of course. And as we'll obviously get to over the next hour, like this one's special for me, man, because like this is a relationship that existed like long before, like, but probably before I knew what crypto was, but like definitely before I thought crypto was relevant. And so I think in this like industry where well, and we'll talk about in a second, but on my side of the industry where we're all like kind of brought together through like the magic of the internet, it's you get different conversations when you talk to like adults that have like been in the trenches together for, real business.
For sure.
Cool, man. So I guess with that is like a good little preface. Like, would you, can we start this conversation off by just like giving a little bit about like who you are and, not necessarily where you're at today, but like, how did you originally find blockchain in the first place?
Yeah. So I'd have to go back to 2010. There was a website, and actually, I think it still exists, slashdot.org. Have you ever heard of it? It was kind of a very
I remember Slashdot. Is Slashdot the same as, yeah, okay.
yeah. It's. I don't know if it's still a popular website or not, but I used to go on there every day and just kind of read what the latest and greatest was on tech. It's very tech focused, nerd centric, and the title of the post was the most dangerous project in the world. Of course, who's not going to read that clickbaity title, right? I was like, this is super interesting. So I started reading it, and it was about Bitcoin, and it was about this Satoshi Nakamoto and whatever, and a link to the white paper. And I read the white paper, and I'm just like, that's just one of those moments that a lot of people have had in the early days of crypto and Bitcoin, where it's just like, oh my God, the implications for this are scary and fascinating, and I want to learn more. So that's when it first kind of dropped on my radar. And then I just kind of, didn't really pay much attention to it over time. Like you kept on seeing more and more things in the news about Bitcoin and crypto and Bitcoin ATMs and, different things people were trying to do with it. And so after business school in 2013, we worked for Anheuser-Busch InBev together, and we were hired right around the same time. And that's when I started mining Bitcoin. So at the time, the best hardware you could get were these ASICs. And the speed of the ASIC was 333 megahertz per second, which was pretty good for the time. I got them off of eBay somewhere or something like that. And I set up multiple rigs and was mining, and I was part of a mining pool, and it was just depositing into my, at the time I didn't have a separate wallet set up, so I just deposited it straight into the exchange, which you're not allowed to do anymore, but that's what I was doing then. It was fine then. And that was fantastic. That's how I kind of got into it and started, really kind of diving into figuring out how this stuff was working. And at the time, like, Coinbase was still very new. And so people could either, in order to get Bitcoin, they could go to an exchange and buy it, or they could mine it. And a lot of people just still didn't know how to get it if they weren't mining it, because the exchange wasn't really that prevalent. But yeah, then I said, there's an opportunity here for the enterprise, and the company should really be looking at this. Who knows what it could lead to. And at the time, there was a lot of hype that was being generated around Bitcoin and crypto, and unfortunately for more nefarious reasons like Silk Road and stuff like that. Um, but I actually partnered with Budweiser while at Anheuser-Busch InBev, and we did this little, Budweiser Made in America pre-party event where if anybody who registered for that event, this one was, I think, in Utah somewhere, they could also register for a Coinbase account. And if they did, they'd get $10 worth of Bitcoin that they can then use towards the purchase of a Budweiser at the event. Do you remember that?
No, dude, I for sure do, and I'm just trying to jump in here because like I think this is a conversation worth like picking apart. Because so just like for brief context for our for our viewers, Brendan and I met again in 2013. I think we started within the same month or 2 months at Anheuser-Busch in this like brand new technology innovation group. And I was immediately taking it under the wing of, I think it was one of Brendan's peers. I'm younger and more junior than him. And so I was immediately working on these like Internet of Things, like putting accelerometers into tap handles, that kind of stuff. But Brendan, like I so vividly remember at the time, was like already Bitcoin pilled, and I remember going to your apartment and seeing like your Bitcoin farms. Man, like I literally have a picture of it that I snuck while you weren't looking to like show all my like Stanford CS friends, like, well, look, this guy's mining Bitcoin, and now I look at that picture and like cry myself to sleep at night. But I guess like just if you so the activation that you're talking about is essentially like we created these like you working with external technology partners created these vending machines that would accept Bitcoin, and then separately created this like promotional thing with Coinbase where if you sign up during this event, and I think the event was a concert, right? So like if you sign up during the concert, you get the $10 that is supposed to be used for beer. So it's like sign up for this, get a free beer, right? So with that being like that was supposed to be the pilot to show like the company that like Bitcoin or digital currency could be like an important technology for the business. And like spoiler alert, like I think you did the pilot and like nobody would ever talk to anyone about Bitcoin ever again until like the NFT craze of like 2021, right?
Exactly. Yeah, it wasn't. This is how innovation goes. Oftentimes, people who are, exploring emerging technologies and want to do something with it, and sometimes do. It's not relevant for like another 10 years. You're just so ahead of the curve that it doesn't mean anything to anybody, right? But there's potential there, and you see it, and you want to do something about it, and you want to help the organization, embrace it in some way, or at least explore it and start to, be aware of it. So there was, I can't remember what the numbers were, but there was a subset of individuals who registered for the event and registered for a Coinbase account. They received that $10 worth of Bitcoin. And there were only like 3 or 4 people who used the Bitcoin at the event to buy a Budweiser. And I think the event was around, the attendance was around 2,000 people. So it wasn't a very big one. But that said a few things to me. It said that, either A, people just wanted to keep the Bitcoin because, hey, Bitcoin. And B, at the time, in order to purchase something with Bitcoin, you'd have to present your QR code, have it scanned, and then attraction. That was new for people. Like that, that was a totally new thing, and it was a little confusing. You had to have the Coinbase account on your smartphone, and so it was a new user behavior type of thing that just So, but it was a great experimentation. And, if you look at AB InBev, I can't remember how long ago this was, maybe like 2 or 3 years ago, they started jumping on the blockchain crypto NFT bandwagon. If you remember all the stuff that came out about that,
Yeah. And honestly, look, man, like let's not kid ourselves. Like the stuff they're doing now has nothing to do with blockchain. They're literally just like jumping on a fad that happens to be in our space and like again, my when I was director of finance for Bud Light, my yearly marketing budget was how many like over $1 billion. So like, you know, they see something go viral, they're going to do it. Like that's just how big brands work. But I guess like to drill in on this, like you introduced this company that is like I believe one of the most like perfect examples for like the power of crypto, just in terms of like multinational, like cross border, like super capital efficient, like super low cash balances. And yet, like when you introduced this technology to them in 2014, like literally the message to you, I remember I was there, was like, Brendan, shut the fuck up. And so like I guess like my question to you now that like, as much as I like probably was contributing to that, now I'm like, holy shit, I was wrong and I wish I was listening. Like, what is your takeaway from that experience? Was it like companies need to like be more forward thinking, or is it that like it doesn't matter how good the technology is, like if the world's not ready for it, it doesn't matter. Like where do you
Yeah.
kind of fall on that experience?
Well, having worked in innovation for multiple Fortune 500 companies, I know that no matter how good a solution is, even if the business case is solid and you're saving millions of dollars, making millions of dollars, if senior leadership isn't bought into it, it's not going anywhere. And when I say senior leadership, I mean senior leadership of both, the organization overall and also the function that you're trying to help. So if they're not sold into it, then it's not going to go anywhere. And this is actually a problem for a lot of innovators out there. It's just you'll put the business model together, you'll create a proof of concept, you'll run a pilot, you'll prove that it's viable, and you'll pitch that. And still, it's like, well, we don't really want to disrupt the business, right? Like we have our current operating procedure, we have our and any small if you move a small lever in one of those business processes, it could equate to millions of dollars in cost or millions of dollars in profit, depending on if it's a top line or bottom line type of approach. But little differences in that process makes a big difference, especially when you're interacting with millions of customers or clients. So there's a big hesitancy to change process, especially if the process is new, hasn't been totally proven out. So it's just one of the many challenges of being an innovator in corporate America.
And I guess I like there's no real generic takeaways you can like walk away with, right? I mean, I guess it depends on like the company and like the industry that company is or something, but I mean like if I just made you like King Brendan of all CEOs, like, and you just like had an opportunity to change the way American business was done, like, do you think that we're too conservative, or do you think that like the innovators might actually be like a little too aggressive and like the conservatism in the CEOs has a point?
It's on a case by case basis. You'll see some organizations that are all over innovation. The CEO is he's making sure that his people are failing fast, that it's okay to fail, that you've got to try new things, you got to get out there and you've got to have a budget for it in order to try these things. Other companies, they have a budget for innovation. Maybe they have a small group or a function and they want them to go off and kind of explore new things and test the waters. But at the end of the day, they're more conservative and they don't really want to disrupt the business or change it for the better. So it's all different flavors. It just depends on the appetite, the budget, what kind of impact it might have, and whether you're interested in exploring new and different
Yeah,
approaches to business.
for sure. I don't know. This conversation is probably a dead end, and like unless you specifically want to talk about Anheuser-Busch, and I think like their problems are much more about the culture war than it is about technology right now. Anyway, so all right, so we like our careers like split off in like 2015-ish, and then I know that like just to like kind of fast forward through background, so you found yourself first in the insurance industry, like believing still in this technology and evangelizing blockchain, and then eventually you found your way to the Risk Collective, which is where you are today. So just can you like help us understand that journey, and then like what are just like the key important parts we should know as we enter this next
Sure.
part of the
Yeah.
conversation?
Yeah. No, throughout my journey, I've always tried to bring blockchain into the enterprise in some way. And so I worked in the same function, but different industry. So innovation for insurance. And there was a brainstorming session one day, how we could use blockchain for personal insurance, specifically personal auto. And I came up with the subrogation idea. And basically, carriers are sending billions of dollars to each other on a claim by claim basis, or sometimes even a line item basis in a claim. And so they're, in some cases, literally printing a check or writing a check, putting it in the mail, and sending it out. Other processes involve, like a central bank or a clearinghouse that is managing some of that for them, but they're still doing it on a claim by claim basis, and sometimes on a line item basis. So the overhead for this is very expensive. So what if you just batched settle? So what if Liberty Mutual and Geico decided every month we're going to settle up, and we're going to put everything, all those claims, all those line items into one, and either I'm going to owe you something or you're going to owe me something, and we'll be done with it, and we'll be square. So basically, we built a proof of concept using a private Ethereum network, and put a little front end in front of it, a UI, and shopped it around to various carriers. State Farm, Allstate, maybe even USA, I can't remember. And they all thought it was a really, really cool idea. And so much so that eventually State Farm and USA would go on to build their own subrogation application together. But at the time, I was liaising with RiskStream, which you referenced, which is the insurance industry's largest nonprofit blockchain consortium. And I was in the working group for RiskStream on subrogation, because we had, as Liberty Mutual, we had given over the idea and the concept to RiskStream to carry forward. And the reason we did that is because even though we showed this to other carriers, nobody wanted to work with us because we were competitors. And so it wasn't going to go anywhere. It's a network-based technology. You got to work collaboratively on it. And any one carrier can't, bring an idea and own the idea and expect people to work with them on it. And so that was brought forward within RiskStream, worked on for a while. And eventually there was an opening there, and they wanted me to come over as their head of product to start, working on basically more insurance ideas on blockchain for the industry, and not just one carrier. So I did that for a couple of years. And prior, actually, at Liberty, it wasn't just the subrogation stuff that I worked on, but also worked on digital auto tiling. So putting basically it was before NFTs, but basically putting an auto title onto, like, inside of an Ethereum smart contract. And
Auto, like automobile.
sorry, yeah, automobile, right? Yeah, auto insurance, yeah. So basically putting the identity of the vehicle onto a smart contract. This was like 2016, 2017. And also there was another idea that we were working on for homeowners insurance, and being able to, not only have the property title on blockchain or on a smart contract, but also the entire history of anything that happened with the home. So if repairs, updates, and so this was an implication for title insurance. So when you buy a home, you have to get title insurance, making sure that the title is the record that it is supposed to be before it transfers ownership to the new owner. So there were a lot of implications for insurance. And so then went over to RiskStream as their head of product for a couple of years, stood up the product management function, and worked on exploring a bunch of different opportunities across different product lines for the insurance industry using blockchain. So commercial, personal. We're now working on some stuff for inland marine, some stuff for parametric insurance for homeowners. So there's a lot of different applications out there.
Cool. So, okay, just a couple like clarification questions. So, first and foremost, dum here. Subjugation is essentially settlement, but for insurance, right?
And burst.
Got it. Clear. And then, so, okay, what you're saying is first, when you're at Liberty, you were in this innovation role, and you were saying, like, okay, like, here's a ton of different, like, interesting applications. Like, we can put auto titles on there. We can do, like, home repairs and home titles on there. We can, like, do all this, like, crazy stuff. And one idea is we can do like essentially, I'll say it for my audience, we'll do settlement, right? And like the that actually became like super interesting, like because it sounds like there's a lot of business problems behind it. But the problem with somebody like Liberty Mutual being like, hey, why don't you just like trust us to like keep track of everything, and then at the end of the month, like we'll tell you how much money you owe us, or we'll let you know if we owe you money, but like we'll see.
Yeah, you can see the problems with that, right?
Yeah, it's a trust problem, right? And so like what is the product of like blockchain? It is block space, but like that's a little esoteric for this conversation. Like the product of blockchain is block space that is credibly neutral, right? And so like it is like if you know anything about the point of crypto, like it totally makes sense that um that this like that this is what it's for. But I guess my question to you is like, before we talk about your time at riskstream, like why was that the idea that Liberty Mutual saw like merit in and decided to like see if there was like interest in, as opposed to like any of the other ideas that like to me make just as much sense for insurance to start looking into blockchain?
I mean, why do we focus on subrogation to start?
Yeah, as opposed to titling, as opposed to like repair tracking, as opposed to like any of the other things that
It was a sheer opportunity of potentially reducing the cost associated with that, and the number was very large. So out of everything that we looked at, that at first blush, subrogation seemed like a really good opportunity.
got it. And so when you're like shopping around this prototype that you made at Liberty Mutual before it's like third party, credibly neutral, you and it's this like kind of skin on top of a, it sounds like probably like the JP Morgan, like now it's called Onyx, at some point it was Quorum, right? But like it was the so like a skin behind that. Like when you're talking to like let's say Geico, like are you shilling them on like what blockchain is and like what proof of like stake is and how like any of these consensus algorithm works, or is this really about like subjugation sucks, this is a subjugation platform,
Yeah,
that's what you need to know?
probably both. They know that subrogation sucks and that it's a big cost driver. So I would say that the conversation opens with, obviously this is a subrogation application. This is why we're doing it. This is what we think the potential is for it. And because we're working with other carriers, we know what the debits and credits are with that particular carrier is in relationship to Liberty Mutual. So we know it's a problem for them as well. But then, if they're not up to speed on blockchain, and at the time many people weren't, we would have to go into the nuances and the technicality of why this was important, why this is trustless, why it'll work, and why it won't cost very much to run it. So you get into the business case modeling a little bit deeper, especially when you're talking to people and trying to ask them to work with you on a blockchain-based product.
Yeah, well, and I really like we'll move on with the narrative, but I really just like want to hover over this point of like, okay, you can approach building companies or products in blockchain like from two ways. One, that this can be a blockchain company and like you do something on the blockchain, right? Or you can have a blockchain company where you do something on the blockchain, right? And I think the further away you get from crypto Twitter and the further away you get from degens, like the more it becomes about like what are you actually trying to do here and why, and less about like, hey, we have like included these features that are like really trendy right now, and like not really thinking further than like everyone else is locking their tokens, we should not block tokens.
Right, right. Yeah, I think first and foremost, it's the utility of what the product can do, regardless of what the technology is. Forget about the technology. Forget about how the black box works. Just say this can do X and to this degree. And if that degree is enough, then it's going to pique people's interests. I think at the end of the day, when it comes to enterprise blockchain, and blockchain is just going to be another type of back end infrastructure for organizations to use and leverage and work together on. I think most notably, it's network based, so you're going to have collaborators typically, which is kind of how we're set up. We've got this canopy network, and every member on the network has a node, and the applications that they're using interface with those nodes over the canopy network to communicate with each other and share data. So if you're looking across the insurance industry, any opportunity where there's a high volume of transactions and where multiple parties are sharing data, that's always a good opportunity for blockchain.
Yeah, it makes a lot of sense. And like the way you just phrase it right now made this thought pop into my head. But like, as you're selling to people who don't give a shit about tokens and about like technology, like the way to kind of frame this is like, look, today you have your stuff on the cloud, right? Like you don't really think about what it is. It's like the Amazon cloud, the Google cloud, the Azure cloud, like they're all the same to you. But like maybe in the future, like they're not the same. And like the difference is like you have the credibly neutral cloud or you have the company cloud. And like different people will opt into that for different reasons. Like that's not a judgment thing. I just think that when you use the cloud today, like you don't think about the technology, you don't even think about the companies, you just think about the cloud.
Right, right. I think one of the bigger or one of the additional concerns there is security and where's my data being housed? Is it on premise or is it in the cloud somewhere? And if it is in the cloud somewhere, where are those servers located? Hopefully, in our situation, they're in the United States, but if they're in other countries, we're going to need to, do a thorough security analysis on that and see what the risks are and how much risk we can tolerate. So, I think the cloud is a good comparison because it's pretty similar. However, with that, if you are truly using something that's decentralized, like, Ethereum, if you will, um, you know, it's not gonna, the question of where does the server exist, that question, it doesn't exist. It doesn't work with Ethereum, right? Because it's everywhere. It's all over the place. And I don't think companies are okay with that. Like they wouldn't put claim data on Ethereum, right? They wouldn't. They would have to keep that housed somewhere. So there's different risk tolerances based upon whatever technology it is you're using, and I think the most I've seen in terms of insurance companies being okay with data being on in a decentralized infrastructure is like Oracle data, weather data, stuff they can use for a smart contract, parametric type insurance, that kind of thing. Um, and I also think maybe driving conditions, right? I have seen some instances where cars are reporting driving conditions if there's a pothole or something, or if it's slippery, and aggregating that data in mass so the insurance company can say, all right, you've just logged into Google Maps. You need to go from point A to point B. There are three ways you can go to point A or to point B. A has numerous potholes and it could affect your car. B is wet. There's a main break, so you need to avoid that. C is the safest route, and as our insurance company, we recommend you take route C, even though it might be a little bit longer than A. Something like that. So you can lower your risk in terms of your insurance premiums and costs and loss costs and stuff like that by getting clever and recommending safer routes to travel or something like that.
Yeah, I mean that's like a super cool concept that I've like never like pondered. Yeah, and like I definitely hear you how the insurance industry is not comfortable with the idea. I mean, God, if I like actually sit down and try to explain like what Ethereum is and like where it is, like then you get into like, well, it's called Ethereum because it's everywhere and it's nowhere. And like, it does get like real meta real quick. But yeah, I do wonder how much changes just like because of the technology capabilities of ZK cryptography. And if we can like make products that guarantee that like stuff that gets stored on chain is not accessible, like maybe that changes like calculus is on the insurance side. But in the meantime, like yeah, at the very least, like it is a totally like incredible powerful technology just to do the financial settlement of it, of like you can do all the invoicing, you can do all of the claims, you can do all the legal stuff off chain, and then once everyone agrees, you just like pop it into the system, and like I don't know how much you had to deal with like the real international wire system, but like when I moved over to finance in Anheuser-Busch, I did, and like, dude, it's a fucking nightmare. Like no
Yeah.
moving money, it's unbelievable.
Do you see the recent news about Fed now?
Yeah, I mean, good. The most interesting thing I saw on that is that apparently it's based off of a fork of Avalanche, which like blew my mind. I'm like, yeah, I read that in one article, so take that with a grain of salt. But
Yeah. Yeah. I mean, Canada has Interac, right? So I think they're probably trying to do something very similar, just creating a massive clearinghouse for everybody to use, which is a threat to PayPal and Venmo, those companies, right? Like, see you later if FedNow takes off.
yeah, well, and I've talked to a few people about well, I've talked to a lot of people about crypto, but like some of the more interesting takes is that like crypto and Ethereum are like not necessarily a threat to the financial world. Like they're a partner and like they may grow together, but like a lot of people are not looking at this Ethereum threat to TradFi. what they're looking at is like a huge threat to offshore finance. And yeah, because like the whole point of offshore finance is like how do we use like sleight of hand to like make things happen in the like within the realm of TradFi. And like what crypto is essentially doing is like we can just do that with a button.
Right, right. Yeah, I can see how that might be an issue for sure.
Yeah, and so I don't know. I mean, I think like those are fun questions to ponder, but they basically result in like whatever your prior biases already are, and then a story you fill around around that. So whatever. Anyway, going back to insurance. So let's transition you over from Liberty Mutual to the RiskStream Collective, and like on that change, my biggest question for you is like look, you're moving from a like principal actor in that space to a again like what is supposed to be a credibly neutral one, and like the good part about that is that you can talk to all these people like on the same field, and they like they you know whatever like all the trust implications of that, right? The bad part of that is like you're no longer a player, right? Like you no longer it's one thing to like talk about like innovation budgets and like product management budgets, but like you don't have like the billions of dollars of funds that need to be cleared every day to like make like you're not a customer anymore. And so like I would love if you could just talk a little bit about like how the frame of innovation changes when you go from these like larger institution than the world has ever known ever, and a tiny little innovation nugget into that to like this space where you have like a lot more intellectual freedom and an intellectual weight, but like infinitely less financial or maybe even real world weight.
Yeah, yeah, that's a good question. Well, I would start by saying our parent organization, the Institutes, they've been around for over 100 years. They're very well respected in the industry. They have very deep networks in the industry. A lot of CEOs of various insurance carriers are on the board for the Institutes. The Institutes has a lot of clout, despite the fact that it's not the one that's playing on the network, right? It doesn't have the billions of dollars that to transact with. But we have found that this non-biased entity is needed to facilitate the collaborators on the network because they can't trust one another, and so they need somebody that they can trust that's neutral, who can facilitate and explore these technologies with them together. So it's just the I guess the power dynamics change from being someone who is in need of managing this process more efficiently to being a company that says, hey, let us help you try and figure out how to do this collaboratively and together. So it's just a different channel, I guess, if that makes sense.
No, it makes a lot of sense. And I wonder, do you have any reflections on the state of the insurance industry? And like what you just said is essentially like you have all of these like massive Goliaths that are like so competitive and so cutthroat that like they need a third party facilitator in order to function. Do you see that as like a symptom of like where corporate America or corporate global like the world is, and maybe like because insurance is so old and experienced, they figured this out? Or do you think that there's something like especially like hostile and weird about insurance that requires like literally an adult to come in?
Um, no, I think it's like just about with any other industry. I mean, the beer industry is hugely competitive, massively competitive. It's basically if you're in the beer industry, you're in a sales, marketing, and entertainment industry, right? Like that's what you function, that's what you do. So I just think, whenever you have a very, very old and very saturated market, you're going to get high levels of competition. And whenever you have lots of competition, there's low trust. And I think it's just as simple as that. I don't think the insurance industry is also very regulated, so you've got to be very careful about how and what you do, and make sure there's no collusion around pricing or anything like that, because the regulators are looking out for the end user, the consumer, and making sure that everybody's
Well,
playing by the rules.
the regulator is looking out for no one at all except for themselves if something goes wrong. So that's a different conversation. But I do think, yeah, like the reason why.
So, sorry to cut you off, dude, but did you see the ruling in the Ripple case?
Yeah, I mean, I I mean, like, guess I'm happy, but it's just like more like chaos, you know? And so, whatever. I don't know. I don't know how to take away from that other than like I've been in crypto industry for like 3 years now, and very often I've woken up to like world shattering news. It's just like nice to like wake up one day, experience that, and then be like, wait, did the world just shatter in a good way? Like, so yeah. So yeah, I yeah. Anyway, back to our conversation. Like, I very much like. I think that the reason why we don't see this in most industries is because like it the temptation to collude and to like monopolize and to like do like all the bad stuff that you do when you have like market concentration is like there, and it's like particularly sketch if you have like a coordinating body. But I wonder if like what's specific about insurance, like look in the beer industry, like we had the beer institute, right? But like that was literally a lobbying group. That was nothing about coordination, that was just about lobbying. And like, I wonder if the reason that we never had a coordination group in the way that the insurance industry does is because like insurance is by nature like a collaborative thing. Like the whole point of it is we're all pooling our money together to like absorb risk. And so maybe there's something profound about like insurance doesn't work unless like money can flow or something. I don't, but then why doesn't anything work?
Well, I mean, so the insurance industry, it's really the first digital project or product, right? It's a promise. It's you pay me. Yeah, first virtual product. Yeah, you pay me X amount per month, and if your ship ever sinks, I'll be sure to reimburse you for it. But oftentimes these contracts are multi-party. With surety bonds, there's often three or more players that need to coordinate on a contract. With auto claims, I mean, depending upon how many different cars get into an accident, what if it's a multi-pileup? There could be 10 or more insurance companies that need to coordinate on the claims payouts. Property insurance. Sometimes they're layered. Sometimes you have five or six companies on a commercial property. And then you've got reinsurance, right? And bordereau reporting. There's multiple players that need to collaborate on bordereau reporting. So anytime when there's a product that requires collaboration in any way, that's going to require some sort of need to facilitate that collaboration and coordinate and make sure you get from, you know, um, multiple parties that have ideas about how they want to do business together to a finalized contract and having that be a done deal.
Yeah, maybe there's something about like if there's a zero sum business transaction that is like required for the industry to function, like maybe you need to have mediating like ties between them. Like for example, like if we never bought like excess aluminum from Miller Coors, like the industry would be fine. you know,
Right,
you know?
right. Yeah, because I can't think of in the beer industry. I mean, other than the fact that the U.S. has a weird setup where it's like manufacturer to distributor to consumer, like there's no need for really Anheuser-Busch InBev to coordinate with Lagunitas or Miller or it's just like there's no need there. And if there's no need there, then I don't know if blockchain would have any implications there or not. I mean, the only thing I can think about is in shipping and logistics, right? If a truck has just dropped off a major truckload of beer to the distributor and it needs to go back to the manufacturing facility and it's empty, right? Like maybe there is some place where it could pick up some cargo somewhere, kind of like an Uber type of thing. And that could be blockchain based, where you need to coordinate with external parties or something like that. Um, but for the most part, it doesn't seem like the industry is hinged on coordinating with your competitors.
Yeah. Yeah, I mean, I'm like a huge like I one of the like the biggest reasons I'm like here in this space is because I was in like Anheuser-Busch finance and I realized like oh my God, like finance is just like old and slow and stupid, right? And I've told this story on this pod before, so sorry audience, but for you, you'll appreciate this even more. So in 2017, I believe, it was the year after Anheuser-Busch InBev had bought Modelo, but we had to divest the US operations. And so that divestment resulted in like it was more than a billion. I think it was $1.7 billion tax bill. And so I, as the treasury manager, was like the one responsible for getting that money to the like federal government. And so one day when we're going to send it, CFO walks up behind me, puts his chair behind me, goes, Hicks, I am going to sit here until the wire clears. And I'm like, okay. It's like that started at like the wire, the bank's open at like 8:30, so he sat up behind me at like 8 because we were in New York, right? And at 3:30 the wire cleared. And like every like 30 to 45 minutes, the CFO would like tap on my shoulder and be like, Hicks, where is it? And I would be like, I don't know. And be like, you can't say that. Like, go figure out where it is. So I'd pick up my phone, call Bank of America, and I'd be like, hey, like the CFO is asking where's the money, and they'd be like, literally, we just told you this. The way it works is you push the button, the money goes to the settlement banks that have the money. Like it's in a black box. We cannot tell you where it is. Like this is the like federal wire system. It will clear, but like it'll clear when it clears. And then I would hang up and be like, it's on its way. And then I would go back to like making shit up that like looking up the price of wheat on Bloomberg or like making decks that were for meetings 2 weeks ago, like just making up work, right? And like I'm a huge believer that if not like that kind of stuff, just like any multinational organization needs to move money across borders because like in order to pay taxes, in order to pay employees, like basically like any business that touches money, like which is all of them, will like be like drastically improved by this technology. I do think that you have like a good point on like these use cases that we look at past like money and transfer and settlement, like really do we need to like target situations like where coordination is like essential and not like a risk of basically like corporate takeover of the economy. But yeah, I don't
The
know.
other thing
Again,
too,
my only pushback to what you said is Anheuser-Busch can definitely use crypto.
right. Yeah, one of the other things that's interesting too is like, why use kind of one of these commercially available services to transfer money from country A to country B, like a TransferWise, right? Like, why would I use that if there's crypto? Well, you'll find that in most cases, depending upon the day, if you're transacting in Ethereum, your gas fees for that transfer might be outrageous, right? And a lot of the protocols out there, at least the popular ones, have some sort of transfer fee that oftentimes are more expensive or is more expensive than using something like a Wise to transfer funds from country A to country B. So even though it's very fast and it's there, it exists, you can use it, it still might be more expensive to use that over something like just Wise, something a traditional type of insurtech or fintech type of application.
Yeah, well, the one that like really blew my mind, like, and just like made me realize that like literally no one gives a shit about the tech except for us that have like dedicated our careers and like our personal lives and our like interests and everything to it is sometime last year Vitalik was on Bankless. It was another podcast, but so he made a comment where he's just like, so Latin America, especially like Argentina, like countries devastated by inflation, like blah blah blah, like it's horrible, and so people are actually like using crypto there, like using crypto to protect their savings and all. And so he goes like whatever, David or Ryan, like the host, he goes, can you guess the number one way that Argentinians use crypto? And that like they're like, I don't know, like MetaMask, like that. And the answer is that like all these Argentinians and like South Americans apparently just hold balances in Binance, and then they transfer to other people's Binance wallet. So like you go to a coffee shop, you'll pay from your Binance wallet to their Binance wallet, but because it's all within Binance, there's no transfer fees. And so like think about this, man. It's like it's all the risks of crypto with none of the benefits. It's all of the worst parts of TradFi with none of the benefits. And yet still this is how like all the people that are opting into crypto for real use cases and not like financial speculation, that's how they choose to use it. Like that is wild to me.
That's crazy. That's crazy. And they're all using just BNB, right? The Binance native coin.
No, I mean, again, I didn't look into this. I'm under the impression that, like, when you go into Coinbase, you're not like on a chain. You just like buy ETH and then you have ETH in your account.
Right, right. And they're using it like that. Okay, gotcha.
Yeah, like they're buying Tether and like sending Tether to each other.
Right, right. That's crazy. That's crazy. Well, if it's working, it's great.
Yeah, yeah, and again, like I love that story just because it blows my minds about like how people work and why and technology works and whatever. But I think like just drawing us back into the conversation, I think like it's so easy to get locked in like consensus and proof of whatever and like blockchains and like but like no one cares about technology except for the people building it. And like unfortunately the people funding it, right? But like what people actually care about is like their day-to-day lives and or insurance companies care about is like their day-to-day operations and like that's really what we need to be building towards like use cases.
Absolutely. I mean, yeah. I mean, it needs to be useful for the end user, and if it's not, then it's not going anywhere. It's never going to get adopted. And not only that, the utility has to be there, but it has to be better than current utility, right? It has to be why is this better than my current process? You know, and if it's more of the same, it's also not going to get adopted. It's just you know.
Yeah. And I'll use this word utility to like pivot into like the last part of this conversation here because like in my crypto broken brain and like with I know who my audience is, like when you hear utility, like what that word means is like, okay, is your token just a token or like can you do something with it on chain, right? And like what I know that you're saying when you say utility is like no like not like use case within like the very like stunted like broken EVM context, like use case within the world, like humans and people and air and food, like that that kind of utility. And so one of the reasons like I was so excited to have this podcast with you is because like about a month ago I invited you on to like just kind of like a daily news stream and like that was the first moment that it hit me that like all of us on crypto Twitter who like believe in this and are pushing it forward and think that we're like the bleeding heart center of crypto, like everything that we were talking about was just like not even relevant or like not even known to you, who is the product manager of a real product for the largest industry on the planet using this technology. And so I guess like my first just like kind of question or thought to you is like based on like that experience and like what you know about like the more degen side of crypto, like how would you kind of describe like the divide between the types of people that are using like private blockchains and blockchains as a technology to build products and like kind of like the degen DeFi like um, revolutionary community?
Um, So the difference between the DeFi community and the people who are really in the weeds with all the DeFi that's going on, and the people who are kind of the general population in terms of crypto use, retail.
I guess like this question might be too broad. I guess like what I'm like trying to like hone in on is that there's like the entire world of building that exists is like super segregated, and like the people that are working on like private blockchains and like real enterprise applications and like you Brendan like could change the world with blockchain like don't even touch the Venn diagram of like the people who I'm talking to who believe that they're going to replace JP Morgan with like a combination of like Curve and Aave. And so I guess I don't know if I have a question there, but like there's something like really remarkable to me in that.
Yeah, I think this is pretty normal for I think traditional product functions where you have to kind of straddle the business and the technology, right? You have to know enough to be dangerous on the tech side and know how it works and the processes that are involved, but you also have to understand the voice of the customer and what it is that they truly need. I don't want to be building something and spending money and development resources on something that the end user is never going to even look at, right? So it's really just balancing those two worlds, understanding them because you have to understand them in order to balance them, but making sure you have a really good idea about what the customer truly needs, and so that you can go and build the capability on the back end in order to fulfill that need. Because you could have an assumption that is, oh, well, ZK is going to solve everything. Well, is it? How, have people adopted, ZK? I understand the implications of it and what it could do, but companies are still not going to be comfortable with putting their information on a decentralized protocol, even if they're using ZK, especially if that information is, PPI, personal information or medical information. So it's just being able to accommodate your end users so that there's not enough desirability for them to want to adopt your product, while also being realistic about the expectations of the organization that you're working for, and working within their risk profile in order to deliver that value to the customer.
Yeah, for sure. And man, like everything you're saying is like literally giving me like PTSD flashbacks to having to deal with that. So I totally hear you. Like philosophically, like when you think of like the was it subjugation the product, yeah, the product that you're building for RiskStream, that like let's fast forward to a world in like 10 years where like literally like hundreds of billions of dollars per day is flowing through the system because the entire insurance industry has like bought into it. How much, like, in that world, how much do you think like Ethereum, like the core Ethereum protocol, and then whatever is built on top of that, is part of the same story of what you're building? Or do you think that those are just like two separate things that like happen to be using like similar technology principles?
They are separate things that are using similar principles. I'd say, we have used Quorum in the past for some of our applications, but that's a derivation of Ethereum. So, I mean, um, yeah, I mean, I don't know. I'm not sure how to answer that question.
Well, here, let me answer it how, like, because what I see, like, what I imagine, if like you're building in blockchain, the I believe that the inevitable conclusion is like either you're going to realize that blockchain is like an incredibly stupid, incredibly slow, incredibly hostile environment, and you don't need any of this trustless stuff. You don't need any of this credible neutrality. Go to Amazon. Or you're going to realize that like what you're trying to do here is like create what I have deemed trustless trust, right? And I think that like we are not in 10 years and 20 years, whatever, like there's not going to be a world where there's like a bunch of different chains that like each like have a different amount of trustless trust and like well, like I believe that Ethereum, ETH, is the asset of trustless trust. And like anybody who cares about this will ultimately like derive that trustless trust from Ethereum. And like what that means for financial stuff is like you'll become a roll up, you'll settle to Ethereum.
Yeah. I feel like with any new technologies, there's a lot of different players to start, and then as time goes on, things kind of get merged, or there's consolidation, less variability and more standardization. Um, I don't feel like that's happening with blockchain. I feel like there are so many different protocols out there, and there continue to be more protocols developed, um, that there really isn't kind of like a standard. There isn't, like there have been some standardizations in terms of how, value transfers, how, other kind of digital property transfers, NFTs or digital property, whatever. There's some standard processes and protocols and timelines around transferring from one wallet to another. But overall, I feel like most organizations are going to lean towards AWS instead of trying to adopt whatever standard they think there might be in the blockchain space. I apologize. Um, whatever standard there might be in the blockchain space. I don't know. I feel like there are some protocols that have risen to the top. Obviously, Ethereum being one of them. Bitcoin for value transfer. Of course, there's the whole sidechain thing, and and then Polygon. Is obviously very popular. Quorum has been popular for the enterprise. So there are a few out there that, Hyperledger, that are geared towards the enterprise, and that some organizations are using. Um, so yeah, I don't know. So I guess over time there is less variability, and there are some best practices there, but it still feels pretty diversified.
Yeah, no, and I think like this is like kind of a whole different conversation about like the crypto thesis and like if you believe like in a future that has like a bunch of different independent chains that provide like different substrates on which like different kinds of applications can be built, or which is like, again, that's just like not what I believe. Like I believe that like we're not developing technology here so that everyone can like create their own technology. Like I think that what's special about Bitcoin, and then Bitcoin fucked it up and handed it off to Ethereum, is like there's something special. And the special is that there's one credibly neutral space and then everything flows from that.
No, that's just totally right. Yeah.
Yeah, and so like again, my long-term vision and like why I've been willing to like dedicate my career and like too much of my net worth to ETH, not crypto, not projects, not tokens, not NFTs, but ETH, is because like I do believe that no matter what you're building today and what every industry is building on blockchain, like the people are going to realize either this is a fad and we jumped on it just like we were building dot coms 25 years ago and we're going to throw it away, or we're going to realize like if we care about the blockchain properties, like we need to find a way to borrow that from ETH.
Yeah. No, I mean, ETH really did set a precedent. I mean, I felt like blockchain was very limited to what it could do, and then ETH came around and came up with the virtual computer.
Yeah, and look, like in 2015, while this was just an idea, like I would not be saying this. Like Ethereum was just like any other one back then, right? But like the way the world works and like it is what it like Ethereum is like the core untouchable protocol, and then the goal, like I really just believe that Ethereum first is Bitcoin. Bitcoin got like super political and so crazy about like what they believe money is and 21 million and blah blah blah, and like gave up what Satoshi was trying to give us, which was internet native property, right? And money's just one part of property. And like what Ethereum does is like, hey, we're just going to give you the platform that has property, and then you can build whatever you want on it.
You can do whatever else, yeah. You know where I thought this was going back in 2015. It started with Bitcoin, transfer of value. Then it came, Ethereum, virtual computing and whatever else, NFTs, smart contracts. Then I thought it was going to IOTA. I was actually really sold on IOTA. It was the Tangle, right? It used tertiary protocol, and it was feeless and instantaneous. And I felt like the transaction fees were the main problem, and that IOTA was going to be successful. And of course, there were rumors of proof of stake with Ethereum for a very long time, and a lot of people, some people thought it was going to happen, some people didn't, and it eventually did. So it's a game changer now that you don't have the excessive fees that you normally would or that you had in the past with Ethereum today, which is
Yeah. No, and look, I think that like you're totally right to pick up on the fees. It goes back to like two conversations ago we were just having where like no one cares about this technology. Like they care about the uses, and if like for me to send you a JPEG costs, first of all, the JPEG costs 10 grand, and then sending it to you costs $200. Like nobody's interested in that.
no, no, not at all. When what is it? What's the NFT marketplace that OpenSea? So I remember Gemini did something with OpenSea where they were making NFTs, and they gave me an NFT, and I was just like, what am I going to do with this? And so I turned around and I put it on OpenSea, and it sold for like $400. I'm like, this makes no sense. Like what is going on here? It's in some cases, like with the artist Beeple, who did very well with the NFTs. I find that fascinating that there can be a place for artists to make their product and sell it, and people can have exclusive ownership of that artwork. Um, I find that interesting. I also find the opportunity for RiskStream, we're actually using NFTs for surety bonds. So the surety contracting process is all NFT based, and it works really well. So you do see it evolving from the original, which is what I think people had thought was going to happen. Like, yeah, it's for this really unimpressive artwork to start, but then it's going to evolve into something more important, which I think it is happening.
Yeah, well, I definitely think we experience all these things in like manic waves that like produce some like inane bullshit, right? Like whether it's NFTs almost entirely or like on DeFi, right? Like Olympus DAO or Doquan, right? Like any of that shit, right? But like what's left in the wake, and it's like a violent, destructive wake, but what's left are these like primitives that are actually like interesting. And like you can take ERC 721 as like a concept and say, like, okay, this is how we should represent home deeds, you know? And so like I'm a big believer in that's just like how innovation happens. And yeah, man, but it's I don't know. I like in these moments, like when we're talking about bored apes, for like literally like for the cost of a bored ape, we could house a family for like for perpetuity. We could feed like a village for a month. Like I mean, it's so crazy. It's so crazy. And like I don't know what to say other than like I don't believe in moral judgments. Number one, like I believe things happen and like you learn what you can from them and then you move on. And two, like all I can think of is like I spent my whole life like wondering how like that Dutch tulip craze could have happened, like how people were like selling their entire home for one tulip bulb, and like I don't wonder that anymore.
Right, right. What do you think, with the advent of AI, ChatGPT, all that stuff that's happening right now, where do you think that there's probably going to be an intersection with AI and blockchain? What, what, what do you see happening? Is there something that's on your radar, something you're thinking about in terms of?
So I don't know where it's going. I'll say first, like the conversation around AI right now reminds me so much of the conversation around spying during the Edward Snowden leaks. Excuse me. And like my experience of that, I remember it so vividly because I was at Stanford studying computer science at the time, and I just remember when that happened, my reaction being like, why the fuck is anyone surprised? Like this is how the internet works. Like and like yes, like the scale and this, but like just the way people talk about like okay, now that we know about this, like what's gonna like that's exactly what I feel like AI is happening with AI right now. And like again, going back to Stanford, when I was studying there in 2009, I took the Intro to Computer Science course. Or sorry, this is 2 years later. My junior year, I took the probability statistics for computer scientists course. And so my teacher is this guy named Mayron, and he's super weird, like eccentric guy. But we get through the whole course, and on the last day, he's explaining to us like, okay, everything we learn, we can actually use these Bayesian probability nets to do like really interesting things. For example, to filter spam. He hits the next slide, pulls up on the like thing behind us. It's a paper by him in like 1996 when he was working at Google, how to use spam or how to use probability to filter spam in Gmail, something like that, right? And like, so all to say is that like the way people talk about AI right now is just like, hey, welcome to the conversation. This is how Netflix, YouTube, Facebook, like Amazon, it's how everything works right now. There's just too much data for humans to understand. And like, suck it up. Like, we're here, you know? And so to answer your original question, like, I don't know where AI and blockchain intercede, but I've never been more confident that they will because like AI is essentially about creating like intelligence and sentience in the virtual world that has like no parameters and no guardrails and no rules and no property. And like what does blockchain do?
Yeah,
Provides a framework for all of that.
yeah, right, right, and vast amounts of it, right?
Yeah. And so like I don't know where this ends up, but like I can totally imagine like in the same way that let's say like I don't, fucking soda uh, and cans are different technologies, but like they wouldn't have happened if like they didn't come together. And now they're both used for so many more different things in different containers, da da da. Da, but like that's what I see with crypto and AI.
Yeah, yeah, for sure. Totally makes sense to me. One of the things I see happening is because if you are using the blockchain and you have these transactions going on with the blockchain, and some of those transactions are different than most. Okay, and so the AI, enters the picture and it starts to record and monitor these patterns, right? And some, patterns A, B, and C are, fraudulent patterns, and the rest of them are normal, common patterns, right? You could aggregate all of the data for a particular industry. So, in our case, we're looking again at, personal auto claims. Some of those claims are fraudulent, and the fraudulent claims have specific patterns that are associated with them. And so if you've got this AI black box that is just sucking up all the data from all the insurance companies in the industry and making this massive database of recognizable, fraud insurance patterns, then that can be a benefit to the entire industry to be able to, check every claim against that black box and have it come back to you saying, oh, this is totally normal, or you should probably dig a little bit deeper on this. This looks a little bit suspicious. So there's some implications, and those are some of the things I'm seeing in terms of the intersection of blockchain and AI.
Yeah, for sure. I mean, I think this is like a great kind of thought to go out on. But I was just thinking about this the other day that like AI is like, first of all, it's just like such a dumb name because it like puts us in the context of like, are we like replacing ourselves or creating something more or less than ourselves? And like it puts humans in this situation of like, who are we? And like, really what this technology is like what happened first is that like we as humans figured out how to use technology to gather data. And then we realized like we don't know how to deal with this much data. And so like what AI is like how do we like find patterns in the noise? And then the question like that's how I see AI. I don't like care about like like chat GBT turning into Skynet, or I don't care like I don't know. I mean, it's just like those are literally works of fiction.
Yeah. Right, right, right. No, but you're totally right. Being able to detect significant signals among an ocean of data is exactly what AI is good at, and we're starting to see some interesting things happen there. I can't remember what the article or where I saw this, but some chemists were trying to come up with some compounds, and traditionally it's kind of trial and error, and you have a database, and but they were able to kind of feed it all of its, they had 20 years of trial and error history data. They gave it to the AI and it came up with like three of the compounds they were looking for or something like that. Just, you start hearing about this stuff all the time. What's great is you can download, a local version of say ChatGPT, feed it all your data, and then just start asking it questions, and you'll be able to pick up those patterns, which is just it's kind of mind blowing.
Yeah. Well, actually, I've got a suggestion for you and for the audience. If you're interested, Ezra Klein, New York Times, like, I don't know, journalist, but he has a podcast called The Ezra Klein Show. And he just had the head of Google's AI. Like, they have a new, like, company that Google, it's like a wholly owned subsidiary, but essentially he came on and explained all of the drug stuff that you're talking about and, like, how, yeah, so super good. Just came out like last week. I will make sure to send that to you, Brendan, directly, and then put in the show notes for this. But man, like I just every single day I wake up more excited about like technology and like the capabilities of like what we're going to be able to do and like what's happening. And the reality is like it's inevitable. Ethereum is inevitable. AI is inevitable. All this is inevitable. And like I encourage all of you, like if you're doom scrolling, like get off the news. Nobody knows what they're talking about. Like the people writing these articles have no idea. The investors writing these thought pieces have no idea. Like stop thinking about like what could go wrong and start thinking about why people are building this.
Exactly. Yeah. Yeah, there's a lot of ethical concerns right now around AI, and for good reason. But I think the people who are on the sidelines having the ethical discussions are probably going to be left in the dust by the people who are out in the field who are actually doing things with AI and moving that forward, maturing the technology and figuring out ways to use it in both beneficial and nefarious ways, I would say.
Dude, you couldn't be more correct. And like, yeah, the people who are going to write the story are out there doing it, not like trying to debate about it. And if anybody wants to debate, I'm not willing to debate crypto or AI until we debate healthcare, like things that matter.
Yeah, there you go. Perfect.
Yeah. All right, Brendan, thank you so much. This was an honor and a pleasure. Before I let you go, can you just shout out like any socials that you're on or anything you want to shout out?
Yeah, yeah, no, thanks for having me on the show. I really appreciate it. If you need to get in touch, I'm on LinkedIn. I don't really use Twitter. I don't use Thread. I don't use Blue Sky. So LinkedIn's kind of my primary go-to.
Yeah, I used to use Twitter. Like that's where my name came from, but I don't anymore because it's like a right wing like scam fest. So
Apparently, they're calling it X now. So for what that's worth.
whatever. Anyway, Brendan, I'll see you in the real world. We'll have a real beer. Like that's how business is done. That's how friends are done.
Exactly. Thanks, Rex. I'll talk to you soon.
Have a good one.
You too. Bye bye.